Hello everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending June 4th, 2021. Note that the week was shortened in observance of Memorial Day. Let's talk about some stocks. The major global stock market indices were all positive last week, with the S&P 500 rising 6.64%. The NASDAQ was up about 0.5%, and the developed markets, the EFA, added 0.73, and the emerging markets added 1.6%. Now, fixed income, the interest rates fell and bond prices rose last week, with the aggregate bond index up 0.12%. The yield on a benchmark 10-year treasury declined 2 basis points to 1.56%, following disappointing monthly employment numbers. Commodities, oil prices, as you can see by the prices at the pump, continued their gains last week and broke through $70 per barrel at an intraday price, hitting a 3-year high on Friday, but it did close for the week at $69.62 per barrel, up 4.1% for the week. Let's talk about economic data. We talked about the unemployment numbers. May non-farm jobs were only 559,000 were created, which is below the estimates for the second consecutive month. The unemployment rate, however, fell to 5.8%. Due to declining numbers of people available for work. Now, this is likely impacted on ongoing supplementary unemployment insurance benefits, as we've been talking about, and limited child care outside the home, as well as high rates of early retirements. As we know, a lot of people are retiring and saying enough is enough at this point. The Purchasing Manager Index of manufacturing rose again in May to 61.2 versus 60.7, which was the April number. It also was stronger than consensus expectations as demand boosted new orders. Now, the report indicated that U.S. manufacturers are wrestling with record long lead times, transportation bottlenecks, and shortages of basic materials and workers. I mean, when you look at it out there, try to get a house built right now, try to get anybody or anything out there right now. It's really kind of crazy. Also, look at the real estate market. There's hardly any inventory at all. So, service index for May rose to 64, higher than the prior month, and once again exceeded the expectations. All 18 service industries reported growth in May. This marked the 12th consecutive month of gains, of course, right? Because everything's opening up. Employment growth slowed, although business activity and new orders accelerated. Let's get into the company news. DocuSign, which is a Core Select and a G33 holding, reported quarterly revenues and earnings that beat expectations as management of this cloud-based e-signature software company guided full-year earnings upward ahead of expectations, and shares rose 15.68% for the week. And many of you know DocuSign because all of our TD Ameritrade paperwork comes through DocuSign, so you understand this. Suncor Energy, which is a G40 holding, rose 11.12% last week, following an investor and analyst day at which management emphasized its earnings and cash flow growth potential, as well as superior dividend growth on a new higher price of oil. And there you have it. So we hope you're doing well. Kind of a short one for today. We're thankful for you having a part of our family, and God bless you. If you have any questions, please feel free to call us at 855-756-5700 or visit us online at aradvisorsinc.com. Have a great week. We look forward to seeing you next video.